Hello and welcome to another episode of the Unedited Adda with me, Srinjoy Sen. And today I have with me a very senior professional, Mr. Kaushik Sen. Welcome.
Thank you. Thank you.
And he is with Aditya Birla Life Insurance. And today is going to be more of a masterclass about some tips and tricks about what we need to learn about life insurance and what we can do better with life insurance.
Thank you, Srinjoy, for inviting me to this forum. So, I'm in the life insurance segment for the last 30 years, and I'm with Aditya Birla Sun Life Insurance for the last 10 years. I have seen the life insurance market since the days when there were no private life insurance. In the year 2000, the private life insurers came to India with an objective to increase the insurance percentage of the Indians, but somehow awareness about life insurance is still low in the Indian financial markets.
Right. So, in general, so like even I myself do not know what is life insurance, what happens in life insurance, or what are the types of life insurance which is there.
See, basically, life insurance is a very old concept. Before there were other investment opportunities. Say in 95 when I started, investment options were very limited in India. So we had bank fixed deposits, postal savings, shares, physical shares, and life insurance. So, but post 2000, the investment avenues have increased. Originally, if somebody used to invest in bank in the 90s, I'm talking of, they used to get an interest of 12 to 13%. If they were taking a life insurance policy, they used to get a return of around 7%. Now, why they used to take insurance on those days? Number one, it used to give them a life coverage, and the second, it was a tax savings option. But nowadays, the scenario has changed. With so many investment opportunities, investment avenues, the options have increased. Like you have mutual funds, you will have stock markets, you now invest in gold also. Real estate also, there are other investment opportunities that are coming out. So with that thing, insurance has taken a back seat because people think that if I invest in the other options, there will be higher return.
Right.
But now the point is that I'll give you a small example. If somebody, some father invests some amount of money for his child, say son or daughter, he decides to do invest 10,000 rupees in a month for 20 years for his child. Now, what are the options? He can go to the nearby bank and do a recurring deposit. Firstly, recurring deposit will not happen for 2 years, 20 years. It will happen maximum for 10 years. The returns will be around 6 to 7%. The returns will be taxable. The second option is if he goes to a mutual fund, he does an SIP, his returns may go even up to 20-22%, but the returns are taxable. Again, so he has to pay an LTCG wherein 12%.
What is LTCG?
Long-term capital gains. So if whatever is returned, so if he's invested 2 lakh and he gets a return of 4 lakhs, so on that 2 lakhs there will be a tax.
This is so important. I have zero knowledge of finance.
It is not about you. It is about 80% of the people.
Yeah.
Because unfortunately, what happens is that people are working. Everyone is working for savings, creating a savings, creating a corpus. But what happens is that they don't get the time to plan that.
Right.
Now, the third option is the father saves for his child through an insurance. Now, if the father dies after 1 year, what happens to the 3 investments? The mutual fund will give a return for only 1 year. The money has been just for 1,20,000. So apart from that, whatever the fund grows, the child will get after 15, 20 years, whatever it was the term, the amount. Recurring deposit also, he or she will get only on the 1,20,000. But in an insurance, what happens is that next 9 years, the company will be paying the premium. Say the father had invested 1 lakh, agreed to invest 1 lakh for 10 years, and on 20th year, he was supposed to get 25 lakhs. This will happen even if the father dies after paying 1 year premium, which is not possible through a mutual fund or through a bank FD.
All right.
So this a lot of people don't know. Obviously, if the father survives for 20 years and he is able to save the money and put the money in the mutual fund, the returns may be higher. But nobody can assure that who is going to survive till when.
Very much. So all this, while he is dishing out all the knowledge from nearly 3 decades of experience, I just remembered that he has written 2 books also, which is available on Amazon. I will add the links to the description.
7 smart steps of wealth management and 5 success mantras of financial distribution business. 7 smart steps of wealth management is for people, end user. It is a finance book for a non-finance guy.
Right.
So you do not need to have a huge knowledge about the financial market. There, the positives and negatives of all the investment opportunities in India is given. After going through that book, you can decide whether fixed deposit suits you, or a equity suits you, or a gold investment suits you, or a life insurance.
Is that the same book that you gave me today?
Yes.
Okay. I will surely read it and give a review as well of that. And what about the second one?
It is for mainly insurance agents. See, my area of work is two. One, I guide the individual investors regarding their planning through maybe insurance and other instruments. And the second thing is that I guide and mentor a lot of financial distributors.
Means that can be
Insurance
a
agents.
second income of a lot of people.
One is that if somebody is into financial sector, maybe he is doing a mutual fund business or a loan business, I can help and guide them to start a life insurance business along with that, using the same set of clients. So somebody is taking a loan, he also can take an insurance. The second thing is that there are already life insurance agents who are working, so I can help them if they want to get empaneled with Aditya Birla and start distributing life insurance products of Aditya Birla.
So that might be a lawyer who might.
Yes.
So like any individual.
Any individual. So and the third is that if somebody is not in the financial domain, he or she is having some business, maybe a travel agency or a real estate agency, so they have a client base. Now, out of 20 clients, 3 clients may be approached for a life insurance product. Now, when they distribute that product, they get a commission income out of it.
Amazing. So for all the ones who are watching, whatever you're doing, there is a extra scope of income, and he's very happy to guide, mentor, and empower you to earn some more money, right?
I'll give you 2 small live examples. One is of a client. He was AVP in Shaw Wallace at one point of time. So he had called me to review his portfolio, life insurance portfolio. He had 8 to 9 policies and he was paying a premium of 9 lakh rupees annually. So when I met him, he showed me the policies. I saw one of the policies. He was paying 3 lakhs to ICICI Prudential, 2 lakh to HDFC ULIP, and rest were life insurance policies and other companies' policies. So I said that ICICI Prudential 3 lakh policy, he has certain mortality charges. 30,000 was the mortality charges. So 10 years he is paying a mortality charge of 3 lakhs. 5 years he has to pay 5 into 3, 15 lakhs, and after 10th year he will get a pension which will be market linked. So he said, this cannot happen because I was not aware of this. The agent who had done it has never told me that. I said, sir, this is what it is written in the policy document. You can go through it and then get back to me. After 7 days, he called me. Said that, Kaushik, whatever you are saying, it's correct. So now what to do? I said that you have given 1 year premium, next 4 premiums you don't, you get back the amount with paying, deducting some charges. So you need not pay if you are not satisfied with the policy.
Right.
2 lakhs HDFC, it's giving you good return, you can redeem the same and you can take the profit. And the rest few policies he had, it was good. I said you can run. Few policies he said that it's not, I said it's not good, so you can stop it. So then he said that I had done my return. He was aged 50 at that time. So he said that my retirement planning is done. So what should I do? I said that you can take a policy from Aditya Birla. So he gave me upfront 2.5 lakhs. Then next month he gave another 2.5 lakhs, and currently totally he is paying me 8 lakhs rupees in a year. So now the transition of the client. See, unfortunately, we see this market as a place to sell our products. We don't see it as an opportunity to give solution to the clients. So now, after that, when he received the policy bond, he gave me a call. I was located at Pune at that time. He gave me a call that, Kaushik, what have you done? I said, I cannot pay off more than 10 years. And you have given me a policy of 25 years. I said that, sir, it's 10 years you have to pay and the 15 years you'll get back money. Then he was satisfied. So that what I was talking is the transition of the client who had never read their policy document has gone through. So whoever I go, wherever I go, my objective is not to sell a product, but my objective is to satisfy the client. So I tell everyone that you go through the policy bond. If there is a mistake, let me know so that I can get it rectified. Mistakes can happen in any way. Say after 3 years, if you say that this is not what I was looking, I can do nothing. But if you tell me after the 10 days, see, this is what it was there and I was thinking something else, so I could get it changed. The second instance was during COVID. One of a person who contacted me, he had a business in Paravazan. So he said that, see, the markets are not good, so what can you suggest me if there is any alternative income opportunity? So I said that you can join the life insurance business, take up a code under me with Aditya Birla and start your business. So he did the formalities, he gave me the documents, he did the exams. That year itself, he did a business of 10 lakhs and more, and an income over 3 lakhs of rupees. So currently he is also doing, so annually he does a business of around 10 lakhs and gets an income around 2.5 to 3 lakhs, 3.5 lakhs. So when I asked him that what's your experience, बोले सर हम लोग का बिजनेस में तो इतना प्रॉफिट नहीं होता है, और प्रॉफिट क्या है कि हम देख नहीं पाते हैं. हम आज स्टॉक उठाते हैं, प्रॉफिट होता है, फिर वो प्रॉफिट मेरा फर्दर स्टॉक उठाने में चला जाता है. आज मैं इस साल में मानिए 5 लाख का प्रॉफिट किया हूँ, मेरा हो सके जब तक पूरा स्टॉक नहीं क्लियर हो जाएगा मैं तो वो पैसा देख नहीं पाऊंगा. यहाँ पे क्या है, हम बिजनेस लाए और मेरा इनकम इमीडिएटली आ गया और मेरा कोई रिस्क फैक्टर नहीं है कि भाई मेरा माल नहीं बिके तो. If I can sell 20 lakhs of business, my income will be more. If I am able to sell 20,000, my income will be less, but I do not have any risk factor.
All right.
So these are the 2 live case studies that I shared with you, so it will be easier for the audience to understand.
Absolutely. This is something that is really great. Means someone can just come to you for an audit of their existing policies.
So it's like coming to me is like going to a doctor for a second advice.
Yes, that's really an amazing give he has. So if you're watching, I'll pass on his contact details as well. Do get connected, do meet. There's no harm in meeting people. We build so many bonds and relationships just over meeting
I'll
people.
share 2 questions with your audience. Firstly, everybody knows their annual income. Now, is the death benefit above 20 times of the annual income? Everybody needs to evaluate that. If it is not, then one is underinsured. Why this 20? I will break it up into simple terms. There are a lot of technical calculations like human life value, HLV calculations and other things. I don't go by that. Current bank rate of interest, what is the bank rate of interest? It's around 5 to 6%.
Sorry, I am totally disconnected.
If somebody has an annual income of 10 lakh of rupees, so ideally he should have a death benefit of 2 CR.
So you said 5%. I just remembered. I think I have a SBI account that gives me 2%, or
3.5
2.5%.
savings account.
Yeah.
If you do an FD, it will come to 5 to 6%. So what is that?
I think the IDFC account I have gives me a better.
So that may give.
Yeah.
It's a thumb basic knowledge that
But SBI is very low.
So
once
what
you-
happens is that if somebody is having an income, annual income of 10 lakhs, he or she should ideally have a coverage of 2 CR, including all his insurance policy. What is the logic behind it? If the person dies, his wife can go and make an FD in the nearby bank for 2 CR and he will keep getting an interest of around 10 lakhs in a year.
But,
so the income gets compensated.
But a lot of people I know often tell me, and they ask me also, do you have medical insurance or not?
That is also required. I am here talking of the debt coverage.
So in life insurance, so that is one is debt coverage, and you have something that gives a return over a certain period of time. That also you have
That is there. What I am talking is that, see, there are three types of insurance. One is a term insurance, one is a traditional insurance, and one is a unit-linked insurance plan.
Can you just small little bit at least give me an idea?
Say
of
suppose
what
you are paying a premium of 1 lakh of rupees, you may get a term insurance of say 1 CR. So maybe 100 times.
Now what is a term insurance?
So what is that? So if you are getting a term insurance of 1 CR, maybe you are paying for 10 years and you are getting a coverage of say 30 years. So what happens in this 30 years, if nothing happens to the person doesn't get back anything. If the person dies in between, his nominee gets 1 CR. Now, in a traditional plan, if you are paying 1 lakh, you will get a death benefit of 10 lakhs only. Or a unit linked insurance plan. It's 10 times of the annual premium. Now, if it is a say 1 lakh you are paying for 10 years, 20 years you are supposed to get, so 20 years expires, you are supposed to get 25 lakhs say. So that you will get, and against 1 lakh, 10 lakh is happened. So if somebody dies in between, say after paying 1 year, 2 premium or 3 premiums, anytime during the tenure, his nominee will get 10 lakhs of rupees. In the unit linked insurance plan also same thing. After, if the person dies after 1 year, his nominee gets 10 lakhs. Otherwise, on the maturity, whatever is the market value that he will be getting.
Maturity,
they will be getting.
They get, right. But is this, does any of this also include retirement planning in yours?
Yeah, so there are retirement plannings also. So ideally, an insurance, for an insurance, one should get a child plan or a retirement plan.
So can you tell a bit about child plan and
So I
retirement
had already covered that topic. So I said that when a person is investing 10,000 rupees for a child plan monthly, so he has an option of mutual fund, FD, and an insurance, life insurance, if you can recollect. I have already covered that topic. So that is what it is. Through an insurance coverage, one can get the benefit even if the person father dies in between.
Right.
And in retirement planning, we can give you guaranteed returns till even the 100 years age.
Achha. So I think retirement planning would be something of kind of hook to people. See, because they might be wanting about retirement planning.
Life insurance products in India has two USPs which no other instruments offer. One is that we can give you guaranteed return till even 100 years of your age.
So can you give an example of how much is normally
say suppose premium? You are paying a 1 lakh premium yearly. Now you can get back 30 to 40,000 maybe from the next year itself, and this can go to your 100 years also. On 100th year you will get, say suppose you are supposed to pay for 10 years 10 lakhs of rupees. So on 100 years age you will be getting, you or your nominee will be getting 25 lakhs maturity, but till that time you will be getting 30 to 40,000 every year. Or you can take it in a monthly rest and it may be a 2.5 or 3,000 rupees per month can come to you from the next month itself.
Right.
So this can be there. So this you can treat as a retirement opportunity. So if you say that I want 20,000 in a month, So that means you need 2,40,000. So maybe for 2,40,000 you might have to pay say 6 lakhs of rupees annually for 10 years,
Achha.
and you will get getting 20,000
And
per
that
month.
is only till my lifetime.
Yeah.
Not does not go off to my wife.
No.
So is retirement planning is also what we called as pension plan?
No, pension plan is something else. Pension plan gives you pay a lump sum, and you keep getting a monthly return from the next month itself. Pension are taxable. So the second USP of an insurance product is that till 5 lakhs of investment in traditional plans and 2.5 lakhs of investment in unit linked insurance plans, the returns are tax free.
Sure. 5 lakhs. So for a lot of SMEs, you can help with like employee insurance.
Employer-employee insurance, organizations, private limited companies, partnership firms, they can save in insurance to save their tax.
30% tax.
Whatever is their tax slab, so they can save it under Section 37(1) of Income Tax Act.
So means if 5 lakh rupees we are spending on employee insurance, that 5 lakh does not get taxed.
Suppose a company's taxable income is 20 lakhs, he or she decides to pay 5 lakhs premium for the directors or the employees, whatever is that, under employer-employee scheme, under Section 37(1), the taxable income becomes 15 lakhs instead of 20 lakhs.
So basically, if say
It's
I
under
am a
allowable expense.
so if I am a director and it is being done through my company, so my company pays for it, but I am the main beneficiary.
Insured person is you.
I am the insured person. But this is in general, like which plan can I opt
It can
for?
be any plan.
It can be any. Till 5 lakhs is.
It's
5
not, there is no limit for 5 lakhs. It can be 50 lakhs also.
No, but you said in the taxable part.
See, that there are two parts. Individual policies are tax free up to 5 lakhs.
And what
Annual
if when
rate.
it comes to company?
In the company, it's taxable. The tax exemption comes at the time of taking a policy. The returns are taxable.
Okay.
Say whether it is 1 lakh or whether it is 1 CR.
Achha. So for example, say I have maybe 10-15 employees sitting here. With them, what happens, like if I want to start for them, how does it work, and what is the leave in between, and
So
on
what
and so
happens is that employer-employee insurance can be done for a retention of employees.
No, not just retention. I want so that they get there whatever they are well secured.
No. That you have to understand. I'll tell you. Normally, employer-employee insurance is used for retention of employees. How it happens? When an employee joins an organization, you give certain perks and perquisites. So apart from the salary part, you can give them 2-3 things. Suppose you have 10 employees and you are paying 30,000 per employee, so 3 lakhs rupees you are paying. So 30,000 per policy per head is taken, so 3 lakh coverage comes immediately. So what happens if the employee dies in between? His family can be given 3 lakhs of rupees, which is paid by the insurance company. The burden doesn't come on the company. So this is the security of the employee. You can give them a corpus at the time of retirement, or say after completion of 5 years or 10 years. So then again a corpus is generated. So suppose you are saving 30,000 for 10 years. So you are saving 3 lakhs of rupees, now it becomes 6 lakhs at the end of 20 years. So you can give the employee that amount.
Achha.
Now what happens if the employee leaves company in between? The policy stays with the company. The maturity proceeds comes to the company.
Okay.
So this is how employer-employee policies can be designed.
Right. So I mean means it's a win-win for both the sides. I save tax also, plus it's an added bonus to employees to stay back. Because I know, as a matter of fact, I don't know many of our, because I mean in Calcutta it is more of MSMEs, micro, small and medium enterprises. So I think I don't know a lot of companies who give this employee.
A lot of people are not aware of it.
Right. So I think this is something that all of you watching, even if you're a startup or even if you are a mid-segment company, even with so what's the small team size? You can do with 5 employees.
See, basically, you understand employer-employee policies are for two reasons. One is the security of the company, employees. So we can do it within two employees also, 5 employees also. We can do for 10 employees also.
Amazing.
And if I talk at the tax savings part, so companies which has higher taxability, it's more relevant for them.
Yeah, there's a 30% taxation. Yeah. So we all have to deal with.
So the only thing is that whether one is going for an individual insurance, whether somebody is going for an employer-employee insurance, whether some people have existing insurance, what is required is a little bit of more information and knowledge about insurance.
Exactly, and that is exactly why we thought that you should come and help us to know. It was great for me also because a lot of times my mom or my wife keeps telling me something about insurance, and I'm like, I have no clue.
So whether a person is taking from X company or Y company, whether the person is taking a term plan, whether the person is taking a ULIP, ideally the person should take informed decision. When you buy a mobile, whether you are buying Samsung, whether you are buying Nokia, whether you are buying iPhone, normal courses 80 to 90% people are aware of the features and then only they buy.
Right.
It's not on blind faith that somebody is giving me, so I'm taking iPhone.
No, but in insurance sector does happen
Yes,
like that.
that is
isn't
what
it?
it
So
should not be.
people are very dependent on the advisor.
So I am. That is what I am telling, that it should not be, because it is the client's money. So the client should take a call whether he wants a 15 years plan or a 20 years plan, whether he wants a term plan, whether he wants a term ULIP. Advisor's work is to give the best solution.
What is ULIP? What is the full form?
Unit linked insurance plan.
Achha.
It is market linked.
So means if the market is volatile,
the returns may go up and down.
right. Get your point. So it is really great learning so much because I'm more aware of what is happening, why it's happening, and more aware about what to do for our people who are sitting. I can't be always just thinking about myself. So I think it is great to know this whole thing. So, and I mean, for our company also, for sure, you should give us a plan and let's get this done for our team members. And whoever you're watching, if you are an employee, you should get your employer to get an insurance plan for the whole team if you don't have already, and individually also you can get connected to him and he will perhaps advise you and give you to another advisor. And if you want to become an insurance advisor as a part
Of
income,
the Birla Group.
yeah, as a but you tell me something. So someone who is maybe doing a 9 to 5 job can still become.
Yes.
So as a part income, as a side hustle, I think as an insurance advisor is perhaps a great thing to be. Where of course when you have people like him who literally mints, I would say, insurance advisors by guiding them, by helping them at every step. So I think that would be a really good platform to start with. And of course, if you're a startup or if you are a MSME running a business, do consider taking an insurance plan for your employees. That will help, of course, help you in retention and to save taxes. Everyone wants to save taxes, right? So yeah. So thank you so much for your time.
Thank you.
It was really lovely having you here, and look forward to doing some work with you. And last but not the least, who are your ideal connects? This is something that I always ask, so that
See, any individual who would like to be a little more about of their life insurance, existing portfolio and future portfolio, what it should be, and anybody who is looking for additional income by starting life insurance business, or existing insurance, mutual fund, travel agents, real estate who want to start life insurance business.
Right. Great then. Thank you so much for watching for this long. Please do like the video and do subscribe, press on the bell icon as well, and share it. This session was more of a masterclass about life insurance, so do share it with people who might find it useful. Thank you.
Thank you, Srinjoy.